Hello, everybody. Brian here from quantlabs.net. In this video, I'm going to talk about our new service called Quant Deep Analytics. So, this is the quote I came up with. There's an ETF for that. Now, why would I want to focus on ETFs for analysis? Well, lots of advantages. You can discover the most efficient and cost-effective manner to gain exposure to specific market segments. There's over 60 of them. And not only that, but there's well over 1,000 ETFs to choose from. There's a lot of other major benefits as well. You can invest with confidence in low volatile ETF baskets that consistently generate a Sharpe ratio of more than 2.0, outperforming the market. Anything over that is, well, let's hire them. Also, generating alpha, another way of saying beat the market benchmarks like QQQ in performing sectors. In order to achieve genuine diversity in your portfolio, it is essential to concentrate on ETFs that are not correlated. This approach will ensure that your investments are spread out across various sectors, making your portfolio less susceptible to market volatility. Therefore, consider investing in uncorrelated ETFs to achieve a well-rounded and diversified portfolio. The performance of this product has undergone rigorous testing and has proven to excel even in the most demanding trading conditions. So, what I would recommend is if you're really serious about this, you might want to look at using Interactive Brokers as your broker. Their services are accessible in the majority of many countries throughout the world. Commission fees are most affordable, pretty well the lowest that you'll find. And live trading is now supported with Interactive Brokers on TradingView. Now, the whole idea of this is that it's pretty well focused of being USA centric. Why? Because the country has the most depth, has the most liquid range of ETFs, has the largest ETFs based on market cap, and it also has exposure to foreign markets. Now, there's 8 major sectors or segments that this service focuses on. These are true high performing based on diversity. So we have commodity, overseas, bond, Bitcoin and or crypto, econometrics, currencies, and Forex, pretty well the same meaning, and US equity investing style highlights. So the first one is commodities. So we focus with this on agriculture, gold, silver metals, and energy, which are basically oil and gas. We also have overseas, which is another way of saying emerging markets. These would include Latin America, Asia, and even Europe. Now, there's another surprisingly highly profitable segment, which is financial corporate bonds and US Treasury. Now, of course, we'd focus on Bitcoin and cryptocurrency, and somebody also claim altcoins or alternative coins. Now, another one that does fairly well is econometrics, specifically real estate. And another one that does pretty decently is inflation fighting. Now, among the currency Forex, there's a variety of ETFs that focus on USA dollar, as well as there's obviously a foreign currency focus as well. The big one that we have is US investment strategy style. So there's a variety of ETFs that focus on dividend income, value strategy investing, growth investing, momentum based, and even ESG. USA equity tech market exposure, which is usually the safest, even in the recessions like in 2008. And right now they're leading the markets. So we're covering big tech, cloud communication, gaming, and semiconductor. Also, there's further market exposure in biotech, health, material, US energy meaning domestic energy, as well as transport and utilities. Now, also, we can focus based on USA market indices. That would include Dow Jones, large cap, NASDAQ, S&P 500, and even shorting. So it does continue, as I said, there are shorting ETFs, and there are many more categories. So how does it all work? What's the methodology? Well, basically, we format everything as if you were to get it from an advisor in a tear sheet format. This enables you to have a deep snapshot with examples. We have and a focus on Sharpe ratio, among other metrics. We'd also suggest that you pay attention to max drawdown and volatility ranking. We'd also have you focus on chart performance of winning ETFs versus standard benchmarks like QQQ index. That basically means that you are outperforming the benchmark. Also, you want to focus on pretty well the whole year's worth of monthly returns. You'd also want to look at annual and year to date performance as a benchmark. Also, a nice convenient way is to look at visual monthly returns and many more metrics. That's why it's deep. Now, not only that, but we also have to figure out an automated way to factor in winning ETF baskets with optimal weighting allocation. So basically, I'm saying is it will generate high volume and liquid ETF baskets. All those ETFs that are selected are profitable on an annual basis, as well as that there's portfolio optimization using industry acknowledged weighting allocation methodologies. That's pretty well it and how this whole Quant Deep Analytic service works. Thanks for watching.